Rita. All right, good morning, everyone. My name is Matt McKenna. I'm the volunteer leader of the SCORE Middle Georgia chapter. SCORE is a volunteer organization whose mission is to foster vibrant small business communities. We do that through mentoring and education. We work with the Greater Macon Chamber of Commerce on this series of webinars for topics relevant to small businesses. If you need to access SCORE resources, you can just go to score.org, SCORE.org. We have COVID resources on that site. And if you would like to talk to a mentor, come see us. There's a box there you can check and fill out a little form and submit that, and we'll get you lined up with a mentor, either in Middle Georgia or somewhere that has the right expertise for you. We'd like to thank the Greater Macon Chamber of Commerce for their support of SCORE and our program. The Greater Macon Chamber of Commerce is very committed to helping support and grow small businesses in the region. And again, we really appreciate the support. We have two guests with us this morning. First, I'd like to introduce Ms. Lisa Rackley from the Small Business Development Center, who will tell you a little bit about that and how to get in touch with them. So Lisa, I'll turn it over to you.
Thank you, Matt. Good morning, everyone, and thank you so much for coming to this webinar. We've got a lot of exciting information for you today, things that are hot off the press. My name is Lisa Rackley. I'm the area director of the University of Georgia Small Business Development Center, located in Macon. Our office covers 19 counties in the Middle Georgia area, including Macon, Bibb. We are available to consult virtually via Teams, via Microsoft via Zoom on the phone. So we are here and we are business consultants, and we are working to help small businesses through all of this information that we're getting. Our services are provided with funding from the U.S. Small Business Administration and the state of Georgia through the university. Our services are at no direct cost to small business owners who meet the SBA size standards. So my office is, we're here and we're ready to help serve the small businesses in our 19 county territory. Our phone number is 478-757-3609. Our website is Georgia, GEORGIA, as in Sam, B as in boy, D as in dog, C as in cat.org. Visit our website. We also are having virtual webinars today and tomorrow. So go to our website and click the training tab and sign up for one of our webinars that are at no direct cost to you. We have one today and one tomorrow as well. Thank you again for having me, Matt, and the Chamber, and I'm excited to be here and very excited about learning from our special guest. So thank you.
And before I turn it over to Ed, if you have questions, please use the chat box down at the bottom of your screen, not the Q&A button. We'll be monitoring the chat feed as we go. I would like to very much thank Mr. Ed Carballo. Ed is the Deputy District Director for the Small Business Administration in the state of Georgia. The SBA is a great resource for small businesses. SCORE is a resource partner, so we partner with the SBA to help small businesses, as well as with the SBDC. So we have a great network of folks here to help. So Ed, thank you very much for joining us, and I'll turn it over to you. Ed, are you there? Well, as usual, when we have these live webinars, it's like kids and animals, right? You can never quite get them to work when you want them to. So let's give Ed a couple of minutes here. I would say, and Ed will say this probably also, get him on. There's a lot of moving parts to this new program, and the best way to stay in touch with the most recent information is through the SBA website. If you go to sba.gov, there's a box there on the top for the coronavirus, and that's the best place for the most recent up-to-date information. All right, here's Ed.
Good morning. Can you all hear me?
Yes.
Sorry about that. Got disconnected for a minute. Good morning, everyone. My name is Ed Carballo. I'm the Deputy District Director for the U.S. Small Business Administration here in the state of Georgia. I wanted to thank Matt and the team at SCORE and also Lisa and the team at SBDC for hosting this event. This is some critical information that we want to get out to the public, especially to the small business community, the lenders, and all the folks that are going to use these programs to help get our economy going again and help some small businesses who desperately need it. So let's get started right away here. Just want to make sure y'all can see my screen. And moving to the next slide. Okay, so the program that you're going to see, I just want to let everyone know that as you can remember, if you participated in round one for the EIDL, which was the Economic Injury and Disaster Loan Program, as well as the Payment Protection Program, or P-Cubed as we refer to it, there were a lot of changes. The program morphed over time. There were a bunch of new rules, formulas, forms and such that came out. And Matt already told you where to go. There was a bunch of new information that literally came out overnight. So that information is not reflected in this deck. We're waiting for SBA to come out with an official deck that we can use for presentations. But in the meantime, we know the need is so great. We wanted to get out the information as quickly as we could. So I say that just as a warning that it's possible that some of the things we're going to cover today could change or morph over time, but they appear to be 100% accurate as of right now today. And at the end of the presentation, we'll take some questions, but also I want to show you where you can find all of this information, including the new forgiveness form that came out last night for loans under $150,000. SBDC, the Small Business Development Centers, run through the university here in Georgia. University System UGA is the parent that governs it. And this is just a disclosure that the deck was built in collaboration with SBDC, and it is for informational purposes. So I just wanted to start off real quick with a recap of where we were last year and where Georgia ranked among the 50 states. SBA has 68 district offices in 50 states and U.S. territories. And want to take you through the first and second iteration of PPP and EIDL and where Georgia small businesses ended up at the end of fiscal year. So these would have been numbers from October 1st of 2019 through September 30th of 2020. For PPP, you can see Georgia small businesses received just under $14.7 billion before the program sunsetted on August 3rd of 2020, when the funds were essentially depleted. But the CARES Act basically told us we had to stop that program on August 3rd. That was a hard stop. So that put Georgia small businesses ranked 5 in the country, 174,000 plus loans. For the EIDL program, Economic Injury Disaster Loan, again, the difference here was this is a direct application with the small business, with the borrower, directly with SBA. There is no intermediary, there's no bank. You go to sba.gov, And when the portal is up and running, there'll be an apply button, and I'll show you that later on. So we ended up 4th in the country for those, over 178,000. The 7A program, which is our normal programs in a non-COVID year, we ended up 2nd in the country with just over $1 billion in fundings. 504 program, 13. We got a little bit of work to do there. I was surprised to see that low, although it's still a great number. With the rates being so low, we would have anticipated that to be higher, but we understand, based in the COVID world, what was going on, the need were in other areas. Micro lenders, 4th in the country, 3.6 million. So basically 23.6 billion was the total dollars that were lent to Georgia small businesses in fiscal year 20. And that was over 354,000 unique businesses. And since I'm a numbers geek and I love to extrapolate stuff, basically that equated to 3.15% of all SBA lending in 2020 went to a Georgia small business, which is an unbelievably high number. You may think, well, it's only 3%. In the grand scheme of things, with 50 states and 6 U.S. territories, that is an enormous number. We know there's a lot more work to do, and that's why we're here for the next round of EIDL and PPP. So this round of EIDL is focused on disadvantaged businesses, and in the new legislation, there's a $15 billion set aside for CDFIs, MDIs, micro lenders, community lenders, credit unions, those type of folks, to help specific targeted audiences. And so those 4 specific buckets that were identified in the legislation were disadvantaged businesses, women-owned small businesses, veteran-owned small businesses, and minority-owned small businesses, with an emphasis on those entities that did not receive an initial round of PPP assistance. So last week, you may have heard PPP reopened, and it was open only to these groups, and only by these financial institutions could you submit a loan. So that happened, and actually we did have numbers that came in overnight that I wanted to share with you on that. It looks like nationally, within the first week of the program, we had $5 billion worth of loans that were approved. 60,000 applicants were approved, and the average loan amount is about 75,000. So we know that it is being targeted to these particular groups, and we know that the smallest of small businesses appear to be the ones that are getting approved for these loans, which was as the program was intended. So within these 4 buckets of disadvantaged, women-owned, veteran-owned, and other minority-owned small businesses, there are what I'll call emphasis of areas of emphasis where businesses specific to these groups. Let me go back. So childcare providers, right? These are desperately needed for folks to get back to work, for children, for parents to feel safe that their children are in a safe environment with a small business who can provide this type of care with the correct PPE and social distancing and all the guidelines provided by the CDC incorporated into it. So an emphasis on these groups: childcare providers, any small business related to transportation, rental assistance, agriculture, and then there's a general bucket of other. And these could be any type of small business. That doesn't mean they're not taking applications from anybody else. It just means that this is areas of need that they know will help spur the overall larger economy. And so they wanted to look at these more closely in the $15 billion set aside of the new legislation, which I think was $284 billion total. So let's take a look on the second draw. The second draw for PPP began on January 13th. And in order to participate in this round, there were some minimum requirements that you had to meet. You had to be in business by February 15th, 2020. You must have experienced at least one quarter in 2020 where your revenue was at least 25% below where it would have been in 2019. And a change between PPP2 and PPP1 was in the first iteration, small businesses that had up to 500 employees could apply. Now it's capped at 300 employees. And again, that is targeted towards getting towards the smaller businesses, making sure that those folks have a fair chance to get the funding that they need. Another caveat that you all should be aware of, if you did receive a PPP loan in round one, in order to come back and take a second bite at the apple, you must have depleted all of the funds that you were given in round one. And hopefully you use those for the qualified, and we'll go through what those categories were, but essentially in round one, it was for rent, it was for payroll purposes to retain employees. You could use it to pay interest on a mortgage for a commercial property you owned, and you could also use it to pay utilities. Essentially any bill that was required in order to keep the doors open. Those were the authorized uses under PPP1. So another change between this iteration and the first was on the first go around for PPP, the loan amounts were 10 million per small business or per EIN. Now that has been reduced to 2 million, again, to make sure that we can reach the most small businesses as possible. And the calculation for that is pretty simple. And there was a major change that affects a large segment of small businesses here in Georgia that I want to call to your attention. So if you have a small business, any type of small business, the way that we're going to determine, it's a simple formula, how we're going to determine, and this is right on the forms that we're going to show you later on. But basically, you're going to take 2.5 times your average monthly payroll, and you're going to take that number, whatever that number comes out to be, and you're going to add it to any idle loan amount. So if you applied for an idle in the first go around, not the advanced portion, not the part that was up to 10,000 that was a grant. So let's just take this example. Let's say you have a small business. You look at your average monthly payroll. You multiply that by 2.5. Let's say it comes out to 50,000. If you received an idle loan in round one, not the grant portion, not the advance, but the idle loan itself, whatever that amount was, you would add it into the 50,000. So let's say that you received an idle loan for 50,000 in round one. You do this calculation to come out with another 50,000. That means that for PPP2, the max loan amount you would be eligible for would be $100,000. Now, the big change here is for small businesses that have a NAICS code that starts with 72. That is the hospitality industry. Those are going to be your hotels, motels, restaurants, bars. It's going to be the same formula, except you get a multiple of 3.5 times your payroll rather than 2.5 times your payroll. So again, taking the example, if you're 3.5 times payroll, the average payroll comes out to 50,000. You received an idle in round one for 50,000. Your total eligibility for PPP2 would be $100,000. And that's as it stands now. And remember that the situation is fluid. This could change, but right now, this is the basic formula to determine what your max loan amount could be under PPP2. And the reason why they're including the idle loan amount from round one is very simple. The rate is higher, right? So they want to give folks an opportunity to refinance that to a lower rate, essentially have it go from a 3.75% interest loan to potentially being 100% forgiven if they meet the basic threshold of spending at least 60% on the authorized uses for the funds. Worst case scenario, if you didn't reach the 60% threshold, instead of paying 3.75, you're now paying 1%. So that was the thinking behind that. That's why we're adding any idle loan amount from round one to whatever your average monthly payroll is to determine your overall eligibility under PPP2. So I hope that makes sense to people. It made sense to us. We advocated for it quite vigorously because it was not included as to how we were going to determine amounts for round two. But anytime you can lower your rate or have an opportunity to turn a loan into a grant, that's always going to be a good thing for a small business. So we're glad that they included it in the directions for this round. So they also, under PPP2 now, they added different categories. Again, we took the feedback directly that we received from the small businesses who received assistance in round one. And, you know, we heard you folks, and we definitely put your voice forward to the powers that be up at the Hill to get these new categories included as eligible expenses. So you can see operating expenditures, and this is these are really wide buckets, right? So any software, cloud computing, HR, accounting expenses, anything that you needed to do to purchase, to become a virtual business, if you pivoted and you actually closed your doors and you are operating in a virtual environment, essentially can fall under this operations expenditures bucket. So these are just examples of what would be allowed under each category. So it's not meant to be an all-encompassing list. It's just to give you a general idea of what will count towards the 60% now in terms of forgiveness. So property damage. So if your property was damaged in relation to any of the disturbances, protests over the summer, and it was not covered by your insurance company, you can now include that in the forgiveness equation. Supplier costs, right? So this is anything. So this is materials, raw materials, anything that you need in order to produce your product or service could be covered under this category. And then this is a very broad one now, worker protection expenditure. What does that mean in English? It means if you are open to the public, anything that you need in order to open to be, what's the best way to say it? In compliance with local or state ordinances. So if, you know, the city of Atlanta says, yeah, you can be open, but you got to have, you know, those wonderful feet that are all, you know, stickers on the floor 6 feet apart for social distancing, or plexiglass dividers to divide a counter from a customer. It could be masks and gloves for your employees. It can be hand sanitizer. It can be all those things that are now part of our daily lives. That would fall under this. So anything that you spend in that bucket can now go towards that 60% threshold for forgiveness. And again, it's a wide bucket. So, and now another new one is group paid insurance. So if you are a small business who actually provides insurance to your employees, that can now be included along with the payroll costs, which was a big change from round one. And we think this will help a lot of groups as well. Also, there is a way to get an increase. So if you participated in PPP1 and you got a loan, there is a way. We're waiting for the details to come out on this. For instance, if you had partnerships where you're not a direct owner, you have multiple owners, that type of structure, So for folks that, don't take a salary, they take other forms of compensation, this would apply to. We don't have the details on that yet, but as soon as they become available, I'll show you where to see them if this is applicable to you, so that you can go back and ask for an increase on the first round of your funding. Just keep in mind, they're going to want to see that you've spent whatever you have been given in round one. So there were folks that were, for example, approved for 100,000, but maybe only took 50 of that 100,000 in the first iteration. Those folks as well would have an opportunity to go back and ask for the additional 50 before applying for round 2 of PPP. And remember, if you're granted that 50, you would have to go back and spend that before you can go back and take a second bite at the apple. And hopefully you'll be able to show that you spent at least 60% on these 4 items along on these categories above, these 5 items, along with the first 4 items of PPP 1, which was rent costs, mortgage insurance if you own a property, utilities, anything needed in order to keep the lights on and the doors open for your business. Okay, so there were a lot of changes. One of them affects seasonal employers. So now the definition of a seasonal employer has been revised. So you can operate up to 7 months in a year and you can still be considered seasonal. Before, the threshold was lower than that. In order to be eligible for PPP2, though, you cannot have earned more than 1/3 of your revenue in any 6-month period during the prior year. Okay, and then this is just going to show you the look back periods that you can use. They want you to use 12 weeks starting February 15th, 2019 and going to February 15th, 2020 in order to calculate your loan size. There also are new entities that were not previously allowed under PPP1 that are going to be allowed now for PPP2. One of them are 501c6s. If you have a NICS code that starts with the 511 or 5151, you will now be eligible. What does that mean in English? It means a lot of chambers of commerce. There are a lot of chambers of commerce that are set up this way, that are organized this way, that were not previously eligible, and they will now be eligible with one simple caveat: they cannot earn more than 15% of their revenue as a direct result of lobbying efforts. I don't think in Georgia that applies to the majority of our chambers, but there are chambers that do lobbying activities. So as long as they don't exceed 15%, they will be eligible for PPP2 now. Also, housing and co-ops will be eligible as long as they have 300 or less employees. Some tribal small businesses will now be eligible. Destination marketing. So in the wonderful 5,200 page plus latest legislation that we went through to create the deck, they didn't really define what this was. And I thought, man, what does this mean? Does this mean like folks that sell vacations? Is this travel agencies? What is this? It is not. It is for really cities, towns, and municipalities that have travel bureaus whose sole mission is to drive tourism to a specific target area. So for instance, in our world, St. Simons, Jekyll Island, those folks all have travel bureaus there, and their sole function is to drive tourism in-state and out-of-state to those destinations. They would now be eligible. Another big one that would be eligible are veteran organizations. So just gave you a few examples here: American Legions, VFWs, Disabled American Veterans, AMVETS. All of those folks now would be eligible under PPP2 that were not previously in round one. This is just a quick chart to show you the different iterations. You know, we're calling it PPP2, but it's really 3. You know, when the CARES Act was originally passed last spring, we just wanted to show you what the general parameters of the program were. So the interest rates, the terms, the deferment payment, which in English means it's just a fancy way to say that SBA was going to cover your principal and interest payments. If you did get a loan with us, we would make those payments directly to the lender on the borrower's behalf. The covered period in English means a specific look back period that you would have to spend the funds that you were given in order to meet the criteria for forgiveness. And then the expenses, the payroll expenses, it started out that you had to spend 75% of the money that you were given under PPP1 in order to be eligible for forgiveness, and 25 could be spent on anything else. So not to belabor this, but if you just go to the far right where it says PPP2 final impact, so the interest rate never changed from the first iteration. And originally there was a 2-year term, and then in round 2 in the summer last year, we said, oh, we'll give folks 5 years to repay it at 1%. Now the new act gives you the flexibility, the borrower, the small business, whatever you're comfortable with from a cash flow standpoint. So let's say you get approved for $50,000, you're going to be at 1%. You'll be able to determine with your lender, do you want it to be a 2-year term, a 3-year term, a 4-year term, or a 5-year term? So that will help you from a cash flow standpoint. Also, the deferment periods, again, this is the payments that SBA makes on your behalf to the lender for principal and interest. It's going to be at least 10 months for everybody. It could be longer based on your NICS code. So basically what type of small business you are. And rather than looking at an 8-week period or a 24-week period, we're giving you the flexibility to look at anything between 8 to up to 24 weeks for your covered periods. And now the payroll expenses, you got to make at least 60% of that has to go to your employees in order to be considered for forgiveness. Let's go back to, okay, basic eligibility. So I'm not going to take you through each one of these, but it's basically a flow chart, and it just tells you, you know, yes, no. It asks a question or makes a statement, and then you can simply follow the flow chart as to whether or not you're eligible. If you're not, it shows you a different path, and then it shows you, more importantly, what you will need in order to apply based on your specific scenario. So there were also changes in the forgiveness as well as the actual loan program. So this literally just came out last night. I'm going to show this to you real quick at the end of the presentation. But for any loan under $150,000, whether it was PPP1 or PPP2, it's now basically going to be a 1-page application. And again, I'll take you through that real quick at the end of this. But as long as you meet the 60% threshold, it's going to have all those categories we just covered, the 4 ones that we talked about for PPP1 for eligible expenses, as well as the new ones that just got added in. It's going to have a line-by-line item that you fill out those amounts, and it's a simple formula to determine if you reach the 60% threshold. And then the second page of this really is just initials for you based on your specific scenario. And you're ultimately going to certify that you use the funds as intended. This was some of the stuff that we were guessing was on there before we knew what the actual form was going to look like. So now we know what the form looks like. So again, we'll take you through that at the end of this real quick, show you where to find it. And here's the big one. You're going to have to sign off and date this on the bottom of the second page to say that you use the funds for exactly what you said you were going to use it on the way in. And that's, that's to help ensure that nobody's going out buying houses or boats or cars or anything else with any of these funds, that they're being used exactly for the purpose of the program, which was ultimately to retain the talent that you work so hard to hire and develop, to keep them on the payroll, so that when we're ready to get back to a face-to-face environment, you're not starting from scratch trying to hire new staff. You were able to retain those folks through these direct payments and hit the ground running when the time comes. That's already out. They had a deadline of the 20th to get it out, so that is out already. So there were some other big changes on this, and here we go. So for any new 7A, 504, or micro loan that's done, there's going to be a minimum of 3 months of principal and interest that are going to be paid on these. This actually starts in February 2021. The payments are going to be capped at $9,000 a month. And then after 3 months, businesses with specific NICS codes will receive an additional 5 months of P&I payments. Again, also going to be capped at 9 months. We know right now that these are the NICS codes that are going to get the additional 5 months of payments. This is not a final list. This was the starting point. There is a very good chance that there will be other NICS codes that will be included in these. And I just want to call this one out because we talked about it. Whoops. We talked about it specifically. 72. This is the one that gets to use a multiple of 3.5 times rather than 2.5 times their average payroll. This is the hospitality industry. These are your bars, restaurants, and hotel, motel type establishments. Okay, so there was also debt relief for the new loans that are going to be derived as a result of this program. So for any new PPP loan, they're going to get 6 months of payments automatically, as long as the loan is approved prior to September 30th of 2021. The SBA will pick up those. They'll get it. Everybody will get this additional 3 months. So really, I don't know why they didn't just write it and say 9 months for everybody, because that's the government. They like to complicate simple things. But basically, every business is going to get 9 months of principal and interest payments made directly by the SBA to their lender for these new loans. There is a chance for an additional 5 months if you have specific NIC codes, and those have not been determined yet. But hold your hats, folks. My guess is they would look a lot like the previous ones. I don't know why they haven't named them for this particular bucket yet, but once they do, it'll all be available at sba.gov, and we'll show you where to get it when it's available. So there have been improvements made to the 7A program as well as PPP. One is a benefit for the lender, which also ultimately benefits you as a borrower, is the guarantee has been increased from 75% normally on a 7A loan to 90%. And what that does is it helps mitigate the risk for the bank, because you got to remember, for these most of these loans, especially the smaller ones, there is no collateral requirement. And that being said, this gives a higher percentage to the bank on the unpaid balance in the case that a borrower should default. So basically, it helps turn a no credit decision into a yes credit decision, because the bank is going to receive 90% of the unpaid balance of the loan at the time of default now, rather than 75%. So we think that that'll make a big impact. Also, there will be a reduction or straight out elimination in most cases of borrower fees associated with these 7A loans. So if you get a new 7A loan outside of the PPP, you won't be paying any fees for those now, as long as the loan is approved prior to September 30th, 2021. So here's the stuff that a lot of folks care about, and we got plenty of feedback on this from round one, and we yelled it and shouted it from the rooftops that we needed to make some changes. So the first big one that affects just about every small business are what eligible expenses can be claimed now as a business expense. So we made the argument on behalf of the small businesses directly to the IRS and to the Treasury. And originally they were saying, no, for PPP 1, sorry, you can't claim any of the expenses that you're spending PPP funds on. You can't take those deductions. They considered it double dipping. That is no longer the case. So all of the expenses that you make, that you pay, as a result of the new PPP2 will now be eligible to be claimed for a business expense. And this is where folks like SCORE and SBDC are invaluable. They can help you with that. They can steer you to certified CPAs who can help you navigate this when it comes time for you to claim your taxes this year or next year. So again, our partners SCORE and SBDC are a great resource to go to. They have, in many cases with SCORE, they have CPAs that are part of their ranks, right, Matt? I mean, you guys have folks that are in those fields already that can provide the expertise needed to help guide borrowers through this portion of it.
Right, and we also have a list of CPAs in the Middle Georgia area that specialize in small business we can refer you to.
Perfect, excellent. So the other big thing that this does is it makes the language retroactive. So because they didn't allow it in round one, it's as if they did. They're making it retroactive for PPP 1 and PPP 2, which is a good thing. So if you already had a first bite at the apple and received a PPP 1, and now you're filing your taxes next month, beginning next month or at the end of this month, then you will be able to now claim these as eligible business expenses, which should make a big impact, hopefully, on your bottom line. The other thing that is a huge impact, maybe even more so, is the debt relief. So originally, the guidance that Treasury and IRS sent out to the banks was they were going to have to generate 1099s for anybody who received a PPP 1, and they were going to count that forgivable portion as income. So for folks who had gone ahead and applied for forgiveness and were granted forgiveness already, which, by the way, we know that was somewhere, I think I just saw a number on that, 1.1 billion loans were forgiven already from round one. So that's a pretty large amount of people that are in that bucket. So now the banks will not issue you a 1099. They will not treat that forgiveness as income. And again, they're making the language retroactive back to the original CARES Act like it never happened. So basically, they're righting two wrongs. And we're happy that they're doing this because it should help small businesses tremendously. Okay, so another thing that you probably heard of is Save Our Stages. So Save Our Stages is actually, in the legislation, is called shuttered venues. And originally, it was a group of congressmen and senators that had advocated for the types of businesses that we're going to discuss here to receive some type of relief because they were not eligible. A lot of them were not eligible under the guidelines for PPP 1. And so while we were putting this together, there were a lot of other folks who raised their hands that said, well, hold on a minute. I don't run a business where I have a live stage, but I do these other things that support it. And so the Save Our Stages really morphed into the shuttered venues because now it's a whole different group of people that can be included with that. So technically, these are grants. This is not a loan program. It is separate from PPP. It is separate from EIDL. And it is not open yet. And again, I'm going to show you where to go for that at the minute that it goes live, and it's eligible if this is relevant to you. So again, within the 284 billion, there was another set aside of 15 billion just for these grants. Not a loan, a grant, just like the EIDL advance portion is a grant. 2 billion of that are set aside, of the 15 billion are set aside for these type of entities that have less than 50 employees on hand. Okay, so these are any live venues, theatrical producers, talent representatives, live performing arts organizations. Think about here in Atlanta, you know, you got all the different groups that this would fall under: museums, aquariums. Aquariums will have to meet specific criteria, which is yet to be determined. I'm guessing it's going to have a number close to the normal eligibility of 300 or less employees. This is not designed for the Georgia Aquarium, who has probably much more than 300 employees, I'm guessing. But it is for smaller aquariums. It is for museums that are structured as nonprofits, which most museums are. And this is for independent movie theaters. This is not for the AMCs of the world and the large chains. This is for the one-offs, the mom and pops, maybe something as large as a movie tavern. We don't know yet. That the actual language hasn't come out. Zoos are going to be eligible for this, okay? And they're going to have a basic criteria of they must demonstrate a 25% reduction in revenue from 2019 to 2020, okay? These grants are going to be eligible up to $10 million. And there's a formula, and the formula basically is going to be, and this is subject to change, but as of right now, what we've heard is they're going to take 45% of the gross receipts for each one of these entities in 2019. So whatever their total gross ticket sales, their receipts were for all of these different entities in 2019, 45% of that, up to 10 million, would be individual grants. Okay, and there's also going to be a second round of this where they could receive 50% of the original amount they received, but they haven't even written that portion yet. So once that comes out down the road, we'll let folks know. So the timing on the grants, here's the key thing that we know for sure that shouldn't change. When it opens and it becomes available, it will be directly on sba.gov. And I'll show you again when we're through with the deck here where to go to see this. But they're going to have a staggered opening. So basically, from the time that it's open, and hopefully we'll have at least a couple of days notice, advance notice, maybe not, but that's what we're asking for, so we can tweet it out. We can put it on our website, let all of our partners know. Once the portal is turned on for application, any entity that experienced a 90% or greater revenue loss between 2020 and 2019 is exclusively going to have access to the portal in the first 14 days. In the next 14 days, it'll be 70% or greater, 2020 versus 2019. And this is to ensure that the ones that were hit the hardest get in first. Now, here's a big caveat, a big note that everybody should be aware of. If you're one of these eligible entities and you are approved for a shuttered venues grant, you cannot participate in PPP2. You cannot participate in PPP2. And think about it, why would you want to? Right? It's a grant versus a 1% loan that could become forgivable. But honestly, it's a straight up grant. It's literally free money. It's as free as it's ever going to be, paid for by us, the U.S. taxpayer, of course, but it is a grant. So if you are approved under shuttered venues, you may not go to a lender and apply for PPP2. Just be cognizant of that. And they will be watching that. Okay, so in the new legislation, there was also targeted, what we're calling targeted, idle advances. This is the economic injury disaster loans. We're talking specifically now about the portion that is a grant that was up to the 10,000. That is not yet turned on. Again, I'll show you where to go to see if it is. But as of this morning, they are not taking applications yet for this. These are some basic parameters for it. So any small business, first of all, it extends the application period through the end of the year now. So December 31st, 2021 is now the end date for the advance portion of the new EIDL. You cannot have more than 300 employees. There is a requirement that you're located in a low income community. What does that mean in English? It has not been clearly defined yet. So we're speculating as to what that means. There are some that believe that they're going to follow the HUD zoning, the Housing and Urban Development, that agency, which also happens to track median incomes in those areas. And so there is a chance that that might be the measuring stick or the barometer that they're going to use. We simply don't know. We haven't been given, we have not been given that direction as of yet. But again, I'm going to show you where to go in order to see that once it becomes available. They must have suffered an economic loss of at least 30% during any 8-week period beginning on March 2nd, 2020 and ending on December 31st, 2021. So anytime within that time frame, as long as they can show that they had a loss of income equal to 30% in any 8 weeks between those two dates, they will be eligible for the program. Okay, so here's the real important part that people want to know. And we advocated for this too, and we're still waiting to see how this is going to be rolled out by the SBA ODA, which is the Office of Disaster Assistance. They're the ones who actually process and underwrite the EIDL loan requests and the grant portion up front. So basically, if you remember back when this first rolled out last spring, there was a lot of talk around everybody was going to get a $10,000 grant, and then there was going to be a determination made whether or not how much loan amount you received based on the formulas that we had put out. Well, then they went ahead and they decided, you know what, we can't give everybody $10,000 up front, because if we do that, we're going to run out of money way quicker than we anticipated. So we're going to tie it to this formula, which was basically a $1,000 credit for every worker that you submitted on the application. So if you were a sole proprietor, or you were a sole prop and you had one employee, you would have indicated that on the application. You may have only received 1,000 of the 10,000. And remember, the way it was written, the legislation was up to 10,000. So anyway, for this iteration, what they're going to do, what they're supposed to do, is go back retroactively. So if you only received 2 out of the 10,000, because you only listed 2 employees, they're supposed to make you whole and bring you up to the 10. And that's supposed to be a straight grant. Now, they already have your information, because as part of the application, you had to provide your ACH numbers to a checking account or to a savings account. So they already have that information on hand. What we don't know yet is if the borrower who received the EIDL advance is going to have to do anything to kick it off, or if it's going to be automatic and it's going to be a payment that just might be ACH directly into your accounts. That part we don't know because ODA has not released that information to anybody yet. We're hoping it's automatic. We're hoping they're going to do a simple fraud check first beforehand to make sure, yes, it's a legitimate business. You know, all of those checks that should be done to reduce the amount of fraud. And we're hoping that they're going to just make simple deposits. So there's a very good chance in the near future that if you received an EIDL advance in round one, you could see the difference in whatever that amount was up to the 10,000. The other thing that this does is it takes the EIDL advance portion away from calculating the new PPP 2 formula. So remember when I told you we're using a multiple of 2.5 or 3.5 based on your type of industry, we're taking that number and we're adding it to whatever the EIDL loan amount was, not the EIDL advance. The advance is a grant. It doesn't get calculated. Previously, it was being included in the forgiveness formula. So for anybody who applied and was granted forgiveness who included the EIDL advance in the formula, that money will be sent back to your lender and will be credited to your account. So they're fixing that as well. So what should you do now? Well, it's open to everybody now. Originally, it was open to credit unions and MDIs and micro lenders. So now it's open to all the banks, including the big banks. So you can go, if you received the PPP round one and you're comfortable and you want to go back to that original lender that you got round one with, you're certainly welcome to do that for round two. There is no requirement that you do so. So there's a lot of folks that we know that received assistance through one of the fintechs like Cabbage and some of the other PayPal that were participating in round one. If you don't want to do that or you're not comfortable doing that, you can go to any participating lender. And there was actually 700 plus lenders who did lending in PPP round one that are still going to be doing lending in PPP round two. You can go to sba.gov. We have a tool there. If you just hit in the search bar, lender match, and actually you put in what you're looking for, and it'll send, basically it's like Lending Tree for commercial loans. And what it'll do is it'll match you up with a lender in your area who's accepting applications for PPP. And then, you know, prepare to get bugged by a bunch of loan officers who will be saying, I can do this and that. Just know that at the end of the day, it's all the same for everybody. All the rules are the same, all the guidelines are the same, the criteria, the requirements. So it doesn't really matter who you do it with, because at the end of the day, they're all submitting loans to the same portal. It all has the same requirements. It all has the same guidelines. So it's really just who you're comfortable dealing with. And this is the website that I wanted to take you all to, which is sba.gov. You can go to the normal one and find all the stuff that I'm going to show you here. But we have an additional link that has a /PPP that'll take you directly to this stuff. Also, SBDC, you can find information for them here, georgiasbdc.org. It'll have all their list of their 18 now locations with Morehouse included as the newest one, located at HBCU, which we're real proud of. And they can help you as well as SCORE, again, with things like all kinds of things, including finding a good CPA, to Matt's point, right? To make sure that you're taking advantage of the changes in this iteration, especially from a forgiveness and a tax standpoint. We definitely want you all to take advantage of that. Let's see. This was for last week when we were doing these. We had just, and they're still taking loans now. So based on the limitation where the big banks couldn't participate, We were letting folks know that Ace Loans, which is one of our women business centers, they're also a micro lender and a community advantage lender. They are taking all comers. So you may have heard stories in round one about banks only taking, only helping folks that were existing customers of theirs with PPP 1. That should not be the case any longer. If that is the case, please let us know. We will shout it from the rooftops and put an uncomfortable light on them, because they are not supposed to be doing that. So please make us aware. But you can go to aceloans.org. They also, and again, click on loan information and apply here. And it's literally a portal that takes all the information in and gives it directly to SBA to start working on. If you have specific questions, they also have an email dedicated, ppp@aceloans.org. You can ask those questions in English or Spanish. It's manned 24 hours a day. So that's a good thing. Loyal Trust Bank was actually a bank that was taking all comers, they told us. So there's their loyaltrustbank.com is the website. And then right at the top, they have a banner that says need PPP2. Click here, click that. It takes you again right into the application portal, and it would be submitted. And again, they told us they're taking any small business off the street. They don't have to have a banking relationship with you. Of course, they would like to have one. I'm sure they'd want you to consider them, especially if they're able to help you through PPP2. But these are a couple that were open last week, and of course, it's open to everybody now. Okay, so I see the chat blowing up with questions. I do want to, let me stop sharing this now. And I want to show you the stuff we talked about that literally came out overnight. And of course, it's not going to let me do it. Come on now. Where are you? Nope, nope. Okay, let's go here. Let's see. Let me know if you can all see that. Have you all seen the screen change?
Yes.
Perfect. Okay, so this is one-stop shopping for us, for everything, for both the borrowers and the lending community. And we made it pretty user-friendly. So everything we discussed in this presentation is covered here. The PPP, there's a direct link. Remember the EIDL. In fact, let's go through it now and see if EIDL opened. And if it did, we'll see a nice link that says apply here. Oh my God, is it open? Could it be open? Let me see. Let me see. Boy, this would be literally hot off the presses here. Good God Almighty, it looks like it's open. Perfect. Okay, there's your application for EIDL. Look at that. How's that for breaking news? Let's see if the EIDL advances under that. But anyway, this is the economic injury disaster loan that we just spoke of. This is the one that does not require a lender or any intermediary. So you can come right now and you can apply for an economic injury disaster loan. And the thing that I like is they laid it out pretty simply, all the terms here, right? So what's the purpose of it? What are the terms? What are the use of proceeds? Are there any capital requirements? Is it forgivable? What's the term, right? So these are 30-year loans. And what do you get? Well, you get what we talked about, deferred year of payments. The interest is still going to accrue. Loan eligibility, it takes you through frequently asked questions. Okay, so that's there. Hold on, let's see if this is open. No, okay, it's not. All right, that's what I wanted to make sure. So it looks like the EIDL loan application itself is open. However, what we just talked about, this targeted EIDL advance, is not. Oh, and here's our answer to that question. They did just post this last night. So what we just talked about, if you got 1,000 or 2,000 in the first iteration of EIDL, it looks like you won't have to do anything. SBA is going to reach out to you via email. And they are going to make you whole up to the 10,000. So, and again, they already have this information. So, because you had to include it when you applied originally, your checking or savings account number. So that answers one question right there. So the EIDL application, the portal appears to be open for the EIDL loan portion, which is this part explained here. So that's what the apply here. It's for the EIDL loan itself. The new targeted advance is not open. That's what this is telling us right here, is not available right now. So when it does get approved and they do turn it on, I expect them to have a nice pretty banner right next to this that says EIDL advance, apply here. And that should help folks who didn't get assistance in round one under EIDL. But you can apply for an EIDL loan right now. And those who didn't get the full maximum 10,000, it looks like SBA is going to be reaching out to you directly to make you whole on that. Let's go back to the main page here. We talked about the shuttered venues grant. Well, let's go. Might as well explore while we're here, right? Let's see if it's on. It is how to apply is nope. There we go. There's our answer. It's not yet open. So the good news is if this does apply to you, and these are the thresholds we just talked about, the 90% in the first 14 days, the 70 in the next 14 days, and everything that we just covered is in here as well. So this is good information. But I would expect when it's open, you'll see a button similar to the other one, apply here. So this is where you can come to see once this is, and again, we're hoping to get at least 24 to 48 hours notice. So we can push it out to all of our partners, including SCORE and SBDC, to make you all aware once this portal is open for this grant program. Let's go into what I really wanted to show you, which was PPP. So this is broken out pretty nicely. So if you've never had a PPP loan, this is where you want to go. First draw is what they call it. If you already had that original bite of the apple, you're going to go here to second draw. The forgiveness, this is what I really wanted to show you, just came out. You should be able to see that new EZ form here. Okay, come on. Boom, there we go, 119, here they are. This is the form for forgiveness. So the EZ is for loan amounts that were under 150,000. Looks like they have it as a PDF. You're just going to hit download, and when you do, this is what the form looks like. Okay, so this is for you to work with your lender, whoever you want. You received your PPP1 or ultimately PPP2. You can see the type of information that they are trying to get from you here. Let me blow this up so you can see it a little better. Is that easier to see, I hope? So the name, your business address, your NICS code, your EIN or social security number, whatever you use to apply for the loan, your best contact. Is this for the first iteration of PPP or the second? You're going to put your loan number in. You're going to put your loan amount in. Employees at the time of application, employees at the time of forgiveness. So one thing I wanted to stress here is, the program was initially designed to help small businesses keep their employees on the payroll, even if your business was actually closed, so that you could keep paying them, so you could retain them, so that when the conditions improved enough that you could reopen, or using the funds you could reopen, and then apply for the forgiveness. They were counting how many jobs were saved as a result of these funds being dispersed. There was a misnomer that you had to have the same employees. So if you started out with 5 employees, you had to have the same 5 employees at the end of the covered period. That is not the case. Okay, so if you have employees who became ill and were not able to return to work, if you had folks who refused to come back for health concerns or moved away or whatever it was, you didn't have to have the same 5 employees. You just needed to be able to hire back what you had in that period, in the covered period of 8 to 20, now 24 weeks. Okay, so I just want to put that out there. And here's what the actual formula is. And these are all the categories that we covered, including the original ones. So the original PPP 1 was payroll costs, business mortgage interest, right? So if you owned a commercial property, not the principal payment, but the interest portion of that payment was an eligible use. Rent or lease, utility payments, right? Electric, water, heat, internet, all of that stuff that you need to keep the doors open. And then all of the new categories here that we just covered. And you're simply going to put those amounts for each bucket that you spent. So if you were approved 100,000, whatever went towards payroll, you would put that number in with your lender. Same thing for items 2 all the way through 8. Okay, and then they just tell you, look, you're going to sum lines 1 through 8 here. You get a total. What was your PPP loan amount? And then payroll costs, right? This is to meet the 60% threshold. You're going to divide line 1 by 0.60.
Hey, Ed. Yeah, just this
Yes,
is
sir.
interrupt, but we can't see the form, so.
Oh no, you're kidding me. I'm so sorry.
That's right. But I think the people.
Hold on, let me stop sharing. No, I thought you could. This thing isn't intuitive. I switched tabs. I apologize.
Hey, Ed, I know you have to ring off in a few minutes. There's a couple of questions we'd like to try to get to.
Absolutely.
Yeah, I think that the first question is really explaining what's included in payroll costs. So when you talk, because that's how we calculate both the 2.5 times, but also the 60%. So you just remind us, what are all the elements of payroll costs that can be counted to when you calculate the 2.5 times and the 60%?
Okay, so the answer to that is based on how you're organized. So there's general stuff that applies to everyone, but it's specifically how you are organized. Are you an LLC? Are you a sole prop? Are you a 501c3? Are you a 501c6? Are you, is it a partnership? It's all in what your legal organization is. I think, Lisa, jump in. I see Lisa there. Hold on. I'm trying to pull up the actual specific guidelines for each. Let me look. First round. Let me get, there's links for this, Matt, directly on the website. So what I'll do is I'll pull that out and I'll forward that to you so you can get it to the folks who asked the questions.
Good. And the other question was just understanding, do you have to have, if your forgiveness for round 1 is kind of still in process, do you have to wait to get that forgiven before you can apply for round 2?
I don't think you have to. I think it would be cleaner if you did. And again, there's plenty of money, so I wouldn't. My personal recommendation is to go through and get the round 1 forgiveness granted before applying for round 2. I just think that it would be cleaner. There wouldn't be anything that could impede you in round 2 if round 1 is completely wrapped up. I just think it's cleaner that way. That would be my personal recommendation. Certainly, you can apply ahead of time and get approved. And I think you have up to 10 days after the approval to take the disbursement. So if it's something where you're close to the finish line and your lender has indicated that to you, you could start the application process for round 2. But I would wait until you have a final decision on that before you take a second swing at it.
Okay, so Ed, I know you have a hard stop at 11:15, so I just want on behalf of SCORE and SBDC and the Greater Macon Chamber of Commerce and all our participants, I just want to really appreciate your time here. And I put my email in the chat, so if anybody has any follow-up questions that we didn't get to today, or they come up sometime in the future, send them to me, and I'll work with Ed and the SPA, make sure we get you the answer you need. Ed, any final words?
No, just want to thank both SCORE and SBDC for putting this on in the Macon Chamber as well. We appreciate you guys. You're doing good work out there. Keep it up. And, we're here to support you and the small businesses and the communities we serve. So we're hoping that round 2 will yield numbers like round 1, specifically for Georgia businesses. We know there's a lot of folks that we didn't get to, that we weren't able to help in round 1, and that's specifically what these funds are designed for. So it's all about getting the word out. And again, sba.gov. You can go to that website for all the information, and also /PPP as it relates directly to round 2 and the answers to all of those questions. What is included in revenue by business type is all going to be under the frequently asked questions and the notices that have come out previously.
Great. Lisa, any final remarks?
No, just thank everybody. Thank you for coming today. I learned a lot during this presentation. Thank you, Ed, and thank you, Matt, for inviting me. I'm going to send Matt the links to the SBA website on that question on the payroll cost, because that some of the application actually walks you through that information. And so, Matt, I'll send you the links to that. Okay. But please call us at the SBDC 478-757-3609 or SCORE. Reach out to your resources. We are here to help small business owners in this community, and that's what we're doing. So please either reach out to Matt, reach out to the SBDC. We'll be glad to help you.
All right. And thanks again to the Macon Chamber for hosting us. And like I said, you have my email address. If you have any follow-ups, let us know, and we'll figure out how to get back to you. Thank you, everyone, and have a good day.